Well, I'm Fred McMurray. Welcome back to Pillars Principles. I got everyone's favorite Ray Pillar, businessman extraordinary, Dr. Jim Treleaven, and we've got a special guest today, Keith Gallagher of Connor and Gallagher Insurance. Welcome, gentlemen, for another fun-filled segment. You're supposed
Welcome.
to, but thank you. That's
Thank you.
want to make sure people realize this isn't. Yeah, I won't say it. Anyways, we're talking today questions to ask when you're starting a business, and today we're going to go with the starting question of what forms of insurance should I have? I'm going to kick it off asking Ray since it's is Pillars Principles. Ray, when you started the franchise, what insurance did you have, or what insurance did you purchase, buy, steal?
Okay, so first of all, the franchise requires me to have insurance. In other words, every year I've got to show the franchise that I have insurance, and it's probably a good thing. I don't know how many people start a business. I had a couple of small businesses before where I didn't really delve into getting insurance, but I think it's definitely needed. And I think that the best person who can qualify that will be Keith. Keith, if you could just run in, give us a brief description, workers' comp, general liability, and all that. What does a business need to survive?
Right. Yep. So when you're first getting started, I think the few coverages that really jump off the page are going to be part of a package or business owner's policy, depending on the size of your operation. And what that will include is your property insurance, if you own your building. If you don't own your building, what you might want to insure is the possessions, the personal property that the business owns, anything from your desks and your computers to material that you might store in a shop if you've got something of the sort. But those are the property coverages. The other one to consider would be your business interruption or your business income. That would be if you were to be down for any such reason, what would it take to get you back up and running, and how can you pay some of those fixed bills in the meantime while you get up and running again? The general liability, that's something where it's going to cover either your premises. So if you have, maybe you're a storefront, you've got a lot of foot traffic, cover things like slip, trip, and fall. That's your premises liability. And if you're more, say, on the manufacturing side of things, you've got maybe a product or a completed operation if you are a contractor of sorts, right? So those would both typically have you covered for something like $1 million on any one incident or occurrence, and then $2 million aggregate, meaning you can have up to $2 million in losses before you need to start considering something like an umbrella, and that will go over all liability coverages. As you mentioned, Ray, workers' comp, that is something required by nearly every state. There are limited few, like Texas, where you can opt out of workers' comp, but that is generally required by most states, and something as a business owner, honestly, that it's a good coverage to have for your employees, right? You can make them feel comfortable that they're in an environment, if something should go wrong, that they're going to be taken care of from medical bill perspective and any missed time. So again, whether it is or is not, it likely is required in your state, but it's something I think you should certainly have. And again, it's very likely required in your state. So in order to avoid any fines, that is something you should certainly think about as soon as you have any employees. Auto coverage, should your business own any vehicles, that's something that, we're seeing larger and larger losses come from the auto sector. And the reason for that is, one, anything like physical damage, right? It maybe was a little bump and run type incident where, you could call it a fender bender back in the day. Well, you're not bending fenders back into place anymore, right? They're plastic, they've got cameras. Those have gotten to be much more expensive, even on the very small end. On the larger side of things, the liability, right? If you are responsible for an auto accident, You know, the way our society has moved to more and more litigation, should those end up in court, those settlements or dollar amounts have gotten larger and larger. And that's again where you may start thinking about, is an umbrella right for you? And again, that would sit over both your general liability as well as your auto liability and your employer's liability, which is a subset of that workers' comp coverage. If you don't own any autos, another thing worth thinking about is hired and non-owned auto. And what that might mean is you as a business owner are driving a vehicle not owned by the company. Maybe it's owned by you personally, but you're driving it in the name of the business. You're going from your office to see a client if you're in sales, or to a bank, or to go pick something up supply wise, and you're in an accident, you're liable. That hired and non-owned auto coverage would have you protected should your personal limits be exhausted, anything of the like, and that can generally be added to your general liability policy, or they may add it, depending on the carrier, as a small standalone auto policy itself. And those are really the few coverages that you want to start thinking about from day one. And again, to your point, Ray, if you are borrowing money from a bank for a mortgage to own the building, there's going to be a requirement. If you're leasing a piece of equipment, from a Xerox machine to a large piece of machinery, the lender is going to require seeing insurance, right? So you're going to be required, and then you may be required by clients to provide a certificate of insurance, right? And that's going to be something else where that they hold your feet to the fire, as far as, if you want to do business with us, we need to see that you're a reputable company and that you've got your insurance in place. So oftentimes, as you get started, you made mention, Ray, of some companies smaller before you started your franchise, where maybe you could get away without having it. You start to see with almost any growth that it will be required sooner rather than later. So those are the few coverages I would say, you want to start with. And then as you start to kind of grow, or if you're in any specialty industries, there are further coverages that may consider.
One of the last things you mentioned, well, relative to liability, I've seen a number of times since primarily I help companies that are in the tech industry. So if they're providing services to very large technology companies, virtually always they require liability insurance in their agreements, and generally in the amounts that you mentioned, the 1 million and 2 million. But that's clearly a requirement, even though these are small companies.
All right, so I want to reel it back in again. Met a gentleman, just started a coaching business, doesn't own a building, doesn't have employees, has his own personal car, which is his own personal insurance, so doesn't have cars there. What type of insurance does he need?
So when you say coaching, is this going to be coaching in a business sense?
Business coaching, life coaching, health coaching?
Sure. I guess I want to make sure it wasn't sport coaching, right? Because that may be a little different. But in that sense, so again, general liability is where we would start, Fred. And what you would want to start considering is, again, what I made mention of, you either have premises liability, which would be that slip, trip, and fall, or products and completed operations, which, as it sounds, would be if he has a product or completed operation. In his sense, he really doesn't. So that's what I was talking about at the end. He may need to start thinking about some sort of professional liability, right? So me, in the insurance sales side of things, I'm required to cover errors and omissions coverage. So that would mean if I were to give advice that ended somebody with a financial loss, because that would not be covered on your typical general liability policy. So my bad advice, or that coach's bad advice perhaps, puts their customer at a financial loss. An errors and omissions policy would be something that a coach like that would want to consider. So that's starting to get into some of the specialty coverages. You'd see something like that for, say, a lawyer or a doctor or an architect or an engineer. And then they have, some miscellaneous, and sometimes you'll see it called professional liability. Sometimes you'll see it called errors and omissions. Pretty much one and the same there as far as how those coverages go. And again, that's because you're not too worried about premises liability or products and completed operations, but more so could you be brought to suit for your advice ending in a financial loss for that customer?
All right, Ray, Jim, you got another question you want to ask, or I've got a couple others, but I'll
I just want to make a statement. While Keith was talking, what came to mind was we were hit from behind by a young man who just started driving, and his mother called me and begged me not to report to the police or insurance, and I said I can't, because if my employee decides tomorrow after the accident she has whiplash, then there's no coverage. So I can't do that. So that's just something to be aware of. You need the insurance, use the insurance.
Jim, you want to pop in there?
I did. In a more recent type of insurance that's in the news a lot and is a big deal in a lot of the companies I work with is
Here it comes. I knew it. Go ahead.
Cybersecurity.
That's where I was going to go next.
Okay. Didn't mean to jump the gun, Fred, but
nope, go for it. I figured.
And that's a huge topic. Thoughts on that, even for small companies.
So to your point, Jim, cyber liability, and while we're on kind of the topic of some further coverages, management liability, those are two things that we see more and more in the news, right? Those things grab a lot of headlines, and it's really not a matter, especially with the cyber, of a if this will happen, but a when this will happen to us type of thing, and how do you best hedge, right? So we actually have a page dedicated at the end of our proposals to making sure we've discussed both of those coverages with our client, and should they decide not to go with either, we just ask for a simple sign off to show that we've discussed. That's how important we feel these coverages are. Unfortunately, there are bad actors, right? So whether that is a phishing attack that is just trying to poke and prod at an employee who may be willing to click a link, right? And now there's a ransomware, right? They've froze you out of your systems, and they're giving you detailed instructions on how to buy Bitcoin and send it to them before they'll release your computers back to you. Or if it's something you've got an open port, that's something, Jim, maybe you have a little bit more familiar with on the back end, right, of a website. Something didn't get closed as you were adding a new plugin, and the port's open, and they've poked and prodded around the back pages of the internet and found, that you're an easy target. And unfortunately, like I said, there are these bad actors out there who are looking for a quick buck, and depending on how you and your company handle this, along with your insurance provider, maybe you pay that ransomware, maybe you don't. But the other thing about that, and you likely know, Jim, is how are you trying to mitigate risk, right? Are you backing that up to a hard drive as well as the cloud? How frequently is something like that happen? Can you afford for your systems to go down? It is a serious problem, and particularly if you are storing any personal information, right? That is, or payment processing. Now, most businesses will third party that out, but I can't stress enough, if you are storing personal information or payment information of your customers, you need to be as buttoned up as possible on your cybersecurity end to try to mitigate risk first off. But I would certainly encourage cyber liability coverage as well. And then to speak to the management liability real quick, is just that's things like your age, race, sex, religion type of discrimination. And again, those are things we see more and more throughout your headlines in the news today. And so those are two coverages that once you get beyond those basics, I couldn't recommend strongly enough that you consider. And for the cost, I'm not trying to diminish that it's going to be free by any means, right? But what it could save you in the long run is really a worthwhile venture, I would say.
It can be significant. As you mentioned, there's sort of three general types of issues. There's the ransomware, denial of service. A very large internet provider 18 months ago was attacked by ransomware, and to recover from that was, I can't even imagine what they had to go through. And very large customers, and nobody had email anymore, so it was a real challenge. So that's one. Another one is, as you mentioned, is if you have personal information, you have to be so careful. And a lot of the different states have different regulations with regard to that. So it's a huge risk. But the bad actors comment is important, because people talk about artificial intelligence, which is an issue. But that in the hands by itself is not going to take over the world and kill all of us. But in the hands of bad actors, it's going to create havoc.
All right, we're not going to go down the AI rabbit hole, because we don't need to hear me rant about that.
I wasn't going to go there.
Cybersecurity. When I've talked to usually folks that are in the cyber security insurance, they want to do some type of analysis in order to make sure that you're covered. Is that correct?
Well, a lot of carriers now have even a requirement to have what you might hear as two-factor or multi-factor authentication. So that is by far and away your quickest, simplest solution to preventing most attacks. And what that is, when you're signing into your email account or whatever, software you might use to service your business or your books, what have you, that's when it's going to send you a secondary code to a secure email or phone number that you've dedicated out before, and that prevents these bad actors from accessing your system. So by far and away, that multi-factor or two-factor authentication is your safest, cheapest way to hedge against most of these losses. Now, is that perfect? No, but a lot of these carriers will not even be willing to offer coverage unless they see that you're willing to make at least that step in your process, right? So I would say that is one thing you really should be considering. And as, like you say, they're reviewing what you've got in place, that's probably going to be the first question. And if the answer is we don't have it, it might be the last question. So I really can't recommend enough using some sort of multi-factor, two-factor authentication to protect you and your business.
Okay.
And then mind your customers, of course, but it is
important. And know your customers, definitely. And
it seems like some of them are N-factor authentication, but
all right, so I understand the two-factor authentication. What else? Malware scanning on devices, port firewalls. What else are cybersecurity folks going to want you to have?
Those are both good places next, right? Hiring out, usually this is an area of expertise where many people will third party, right? They're going to go to an IT solution outside of their business most times, because it's just something that they don't have the wherewithal. They're in business as a contractor, or like you said earlier, as a coach. They're not IT specialists. So there are just things in life where relying on specialists is probably your best bet, and that seems to be one of them, because it's ever changing, and to stay up on what's new, that is something I think that is certainly a worthwhile venture as well. You will see things going a little bit further down. Maybe you've heard of Internet of Things or IoT. That is something where it essentially self-isolates many of your systems, but it's probably for a more robust business, right? You're starting to talk some greater expenses because of the computing that's required, but there are other options out there. Our carriers really on the insurance side of things, that two-factor or multi-factor is your strongest bet. They will frequently, depending on the size of the policy you're looking to buy, actually have some of their team members, right? Some of the people on their loss control side, almost red team, and see if you have any open ports. They'll start poking and prodding around your website to see, are there any points that are vulnerable currently? And could we hedge that before, you know, maybe they require, hey, you've got these open ports on the back end. We need you to get these things closed prior to us being willing to offer a policy. But that's typically, again, as you start to kind of grow in size and the limits that you're requesting for such a policy.
Okay, so I ask these questions because, as Jim alluded to, most recently in the news, there was the CrowdStrike issue.
Yep.
And from what I can tell, CrowdStrike is a highly reputable IT company that you would say go to. And CrowdStrike is the reason that billions of dollars were lost. And I guess what I'm wondering about is, from what I've read, cybersecurity insurance only covered maximum 20% of the losses. So I keep thinking about these poor, quote, poor companies that they lost billions of dollars. They went to their they were using a reputable cybersecurity company that was blessed by the insurance companies. And then the insurance companies turn around and say, well, we're only going to pay 20%, even though it wasn't your fault. It was the manufacturer of the software that we told you to use, so to speak.
Mm-hmm.
I don't get this, because here these companies did everything that their insurance folks told them to, and then they get screwed.
So I'm not, you know, I've not seen the same information or articles that you may be referencing, Fred, but what I can say is my gut tells me that may just be essentially some form of underinsured limit. So if they had, again, making this number up, right, but a $5 million loss and they only got paid $1 million, maybe that's because they only had $1 million limit on their policy. And so on the average, people may have had 20% of what their loss was. Now, that is when you want to be speaking with your insurance agent to see, you know, how vulnerable might we be. And, you know, we talked back on the very first topic here of property insurance and business interruption or business income coverage. That is when you are down, how much might it cost for, and again, there are things like business income worksheets that you can work through, but these are preparatory measures you should be thinking about with your insurance agent. If we go down for a week or a month or 6 months, what might that cost us? Again, what are our fixed costs? You know, if you don't own your building, what's your rent? What's your payroll? What's anything that while you're not operational, you still have that cost to the business. And that's what you want to make sure you've got a limit that's adequate to meet that, right? And so we talk on the insurance side about risk tolerance, and somebody, you know, going out to Las Vegas might be willing to lose $100 at a table, and somebody might be willing to lose $100,000, right? They've got significantly different risk tolerance, and it's kind of what helps you sleep at night, but you need to know what your maximum exposure is. So I don't know that 20% number. My guess would just be inadequate limits, unfortunately. And that is, I don't want to say, you know, in once in a lifetime type thing. Something like that may happen again with CrowdStrike. I can't speak to it, right? I'm in insurance. I'm not on the software side of the business, but I think, you know, what you can do is just try to button yourself up. And the other thing to think about is it's very likely companies, again, to use that $1 million payment on a $5 million loss, what they're very likely to do is try to subrogate that loss. And they're going to go after CrowdStrike for that remaining $4 million. And whether or not they get that money remains to be seen, but that is something to think about as well when you're talking insurances. Do you have appropriate risk transfer in place, and what do your contracts look like? If you know, somebody's doing work for you, you want to make sure that they're insured, because if they're not, you know, they're a subcontractor of yours, now you're insuring them all of a sudden. So again, there are things like risk mitigation, risk transfer that you want to think about. And then if in the event an insurance carrier finds somebody else really was liable for this loss, they will likely subrogate on your behalf.
Well, from what I know, Delta lost between $250 million and a $500 million and is going after CrowdStrike.
Right.
They announced it this morning. Yes.
Okay.
So, Ray, you got a final question, comment, or thought?
No, I think that's, I think what Keith and Jim are doing is underlining the fact that you need insurance, and that is it's one of those things that you can't live with it, and you can't live without it.
Jim,
taxes and insurance.
last comments, Jim. Thoughts?
I mean, I just reinforce what Ray said. It's something that you have to think about, and you don't know where things are going to come from. CrowdStrike was not a situation where they were hacked in any way. It was just an upgrade gone bad. And as an old software guy, I'm surprised that doesn't happen more often.
Yeah.
So it's almost like you can't anticipate where the losses might come from. But so generally, as Keith outlined, there's insurance that can cover most of that, but it's very, very important. And, and in many cases, your customers will require it, the states will require it. So it's something that you have to, and just because Keith's here, what you need to do to help figure that out is a really good agent.
All right. Want to thank Keith Gallagher from Connor and Gallagher Insurance. This has been another episode of Pillar's Principle with Ray Pillar and Jim Treleaven this week. We'll be back next week with more interesting topics on how to start and grow a business. I'm Fred McMurray. Have a great week.